The other week I had a look on Amazon and there's something like 40,000 books on business growth. If you put in exit planning, I think there's something like 160 books on how to package up and sell your business correctly.
Today we've got Trevor Stevenson-Platt.
I mean, all of this is hard. That's why I encourage everyone to start thinking about this as early as possible, because it takes time. Don't leave it to the last minute and then think, right, I'm going to sell my company. I'll phone up a broker. That's probably the worst thing you can do. A lot of businesses, you don't get a choice of when you're going to sell. Things can happen in life. So for me, being prepared and being able to press the button today, all of this is about optionality. And we all have this view of, right, we've got the Everest moment, we want to get there. But things happen and it comes out of left field a lot of the time.
Welcome to FounderMetrics by Vested, the podcast where we dive into the world of hotshot business leaders and the specific metrics, not just the usual KPIs, that drive their game-changing companies forward. I'm your host, Ifty Nasir, CEO and founder of Vested, and I'm excited to take you on this journey with me into the world of successful founders. I'm Ifty Nasir and this is FounderMetrics. Today we've got Trevor Stevenson-Platt, Business Growth Institute, and an amazing individual, both from his journey so far and certainly what we can learn from this young man. So, Trevor, do you want to give us a little intro to you yourself, and then we'll kick into what you do and how you might be able to help our audience?
Yeah, sure. So, thank you so much for the invite to coming on the podcast. My background is I'm ex-military, so I was in the army. I was a Royal Military Policeman, and then from there I specialised in being a bodyguard. So I was a bodyguard for the Foreign Office, and then after my career in the military, I went to uni, studied law, and this is back in '97. And then while I was at university, I set my first company up. So that used to fund and insure litigation risk. And then from there on, the short version is that I've been running companies for 27 years now. And towards the latter part of that journey, I worked for a family office, so I was heavily involved in buying companies. And I learned a great deal about how amazing entrepreneurs have built great companies, but they get to the last 100 meters and they mess that part up on the exit. So I then joined the Exit Planning Institute in America. America's way ahead of where we are in the UK to do with exit planning, selling your business. It's a lot more holistic. The Exit Planning Institute's got about 3,000 advisors, and there's about 4 in the UK. I'm one of them. So, yeah, that's a short version. Lots of people get involved in this, but in America, it's much, much more advanced in the way that they do things.
Sounds like a very professional gig out there, and maybe it will become here as well. Let's pick up first then, before we get into the exit planning stuff, which is, I guess, a core part of what we're wanting to learn a little bit about today. What inspired you to join the army?
My family. So my uncle was a military policeman, and my big brother, who's 9 years older than me, was he was in the military police as well. So if you can imagine growing up being 10 years old and your brother's coming back from Canada, going on ski trips, everything seemed so exciting. So that seemed a very clear route that I was going to go down, from a very early age. So from, Cubs, Scouts, cadets, and then I joined the army. I was 17 when I joined, so incredibly young, really, looking back on it now.
But obviously a key part of what made Trevor. So you came out of the army. How old were you when you decided to go and do law?
I was 23, I think. Yeah. So, and even that seems
still pretty young.
Yeah, it seems incredibly young. But I'd been in, and done a great deal in that time. I'd lived abroad. I'd been in Germany, Cyprus, Canada. So I could have travelled a great deal. Learned and you grow up really quickly. So that was good. And then to uni.
So 23, you were already a well-travelled, well-experienced individual. You went into uni to do law, and then alongside that, you talked about setting up your own business. What was that business?
So it was we used to fund and insure litigation risks. So it was insuring personal injury claims. We used to put funding together for the lawyers. And there was a lot of success in that business, but there was also some really, really stupid mistakes. And I think looking back on it now, I was really good at shooting things, probably not so good at running a company. And it was brute force at that stage. So probably not refined as a business owner. And that's how you learn, isn't it? So fired into stuff just a bit too aggressively, I think.
Yeah, you talk about it as a real life MBA. So from MBAs, we all learn lots. So what would you say your 2 or 3 main learnings from that MBA program, self-inflicted MBA program that you put yourself on?
So the big thing, one of the biggest things I learned was I have a real understanding of the cash position of the business. It's pretty much 101 now, looking back at it. But then I'd see lots of companies now on my travels that make the same mistakes. So you've got an eye on the P&L, but essentially that's a theory. And it's a very easy trap to fall into, that the company's growing, but you're effectively growing broke. Every bit of revenue that you bring in is decaying the cash position in the business. So that was one of the key reasons why now one of my business partners is like an ex-PwC heavyweight finance guy, because I become absolutely intrinsically linked up with that. It's a huge important part that you absolutely understand the cash position. The other piece is business is an intellectual sport. Just trying to calm down a bit a lot of the time and thinking things through before you do things. And I think I was very much guilty of just going at everything like bullet a game, and there was no need to do that. So I was, chasing my tail a lot of the time. If I just calmed down and thought things through, I could have had an easier life. So,
thank you. Yeah, I think very solid words there, because I think most entrepreneurs, certainly in their early stages, because they are running to try and win, that they do miss the obvious sometimes, and that stepping back and just taking a little bit of time is so powerful.
I was going to say there's another huge part to that, but I think at the time when you're that age, you're that young, you're not surrounded by the kind of people that you meet on your travels. So now it's a lot easier because the people that I know and that I've developed with over the years, and I didn't really know the people that I know now, and that is a huge difference. So I think it's a huge part that we bring at Business Growth Institute, that we know a lot of good people. So the entrepreneur effectively has like a silent entourage, if you will, by leveraging off our networks that have taken like best part of 30 years to build.
Yeah, a depth of knowledge and experience to lean on, I guess, that you can bring to the table. You talk a lot about business growth and your specialty area around exit planning. Now, everybody thinks that they know what an exit is, but for you, tell me what an exit planner brings to the table.
Yeah, so I think the other week I had a look on Amazon, and there's something like 40,000 books on business growth. If you put in exit planning into Amazon, I think there's something like 160 books on how to package up and sell your business correctly. So, yeah, there's a big difference between thinking, and if I could get anybody on this podcast to take one thing away, it's to take some time, 2 or 3 times a month, to have a meeting with yourself and to start thinking about the business itself as the product, and the ultimate customer is the eventual buyer. And by doing that, you just start to shift your mind a little bit to where you can go. Now, exit planners, the whole thing is quite holistic. It's not just one part. a very big part of what we do is work with the entrepreneur to try to understand what happens next, what happens in the third act. Entrepreneurs don't really retire. They're not kind of designed that way. From the people that I know, they kind of reinvent themselves and go on to do other things, but you've got to be incredibly clear about what that is. Another big part that we deal with is wealth management. So we work very closely with wealth managers, how you're going to deploy capital once you've sold your business. And then obviously looking at the business itself, how to package that up correctly to get it to market.
So let's pick up on that then. So when you're getting ready, so you've decided that exit is the journey that you're coming towards. So the whole piece about prepping for the exit, where do you start? Other than calling Trevor?
Yeah. So I think the key thing is you can't start too early. This should be, in America, they're a lot better at kind of starting off with this end in mind. They kind of seem to be a bit more adapted to setting up a company, but having this mindset that we're going to build it and sell it and try and, make wealth out of this journey. The way we start off is we look very closely. There's three main things in the business that we look at. So if you imagine a triangle, at the top of the triangle, we look at the wealth. So we do, and work very closely with wealth managers. So we get incredibly clear on the kind of money that the entrepreneur has got to earn to do this next, what we call the third act, what they're going to go on to do after. And when we generally start that process, it tends to be, well, there's 3 directors and we want £3 million. It's not been thought through at all. I think it's important that people really think this stuff through, though, because you get one go at doing this. For a lot of entrepreneurs, that there are people who go, one company after another, but for a lot of people that I meet, they're going to do this once, and it's the end of 20 or 30 years. So you've got to get that number absolutely right. What's that got to be? The next part is we look very closely.
Can I just check in on that? What's that number got to be? Surely it's almost back to front, isn't it? I mean, the business is worth what the business is, isn't it? Rather than just what the founders want or the directors want.
Yeah, but it creates a gap where you start to get an understanding of, right, I need X and the business is valued at Y. How do I move the company now to that value? And do I do that over 3 years or 5 years or, but you've got to have a real sense of that. Especially if you're looking at the next stage is going to be, you're not going to be running another company. So that's very key in the thing that we do. The next part is that we get the business itself valued, as you were mentioning, as is, what's the company actually worth now? And we create a defensible valuation for that. So not a finger in the air. We have one guy that does that. He's a specialist at it. So we look very closely at the profitability. What can be done with the profitability, and is that number movable? Is there a gap there that can be worked on over a period? And the other side is we start to look at the multiple. So what is the multiple? How does that look against the market? So it's benchmarked. And then where do you sit in that as a business? As a business, do you look like James Bond or do you look like Mr. Bean? How does it look? Where are you on that scale? What can be done to make the business more attractive? So we look at that. And then the structure of the business is very important. Everybody has got a silent business partner, HMRC, who's coming along for the journey with you. You've got to look at the way that you're structured as well for tax, legacy, and everything else that you're going to do. So we go through that process, and that gives us a position where we can start making decisions about what we got to do in the business. Are we able to grow it? What is the sustainable growth rate of the business? Have we got the ability to grow at a scale that you want, or do you need to reset the capital stack for the business and bring in more capital to grow? So yeah, it's very thorough in the process that we go through.
So from the ones that you've done, let's say over the last year or two, What proportion is cosmetic and what proportion is structural? So making somebody look like James versus Mr. Bean is one thing, whether underlying their capabilities are fundamentally different or changed. Where does that come on the balance for you?
So it's definitely not window dressing, the stuff that we do. There are generally big things that have got to happen in the business. Some of them are, it might be to do with the team and the team needs slightly restructuring. It might be, I think this is a big thing that comes up a lot, is that the business owner has built the business around themselves. So you've got to build a leadership team. You've got to engage the team to go on for a longer journey than probably you were going to go through as well. And then we look at things like intellectual property is incredibly important, intangible assets of the business. So things like that would need to get valued as well. So we've got specialists who do that side of it.
In terms of maximising the value, you've talked about work that you need to do with the founders. But going back to the point that you made earlier, that shift, you called it the shift, where you switch from selling product or stuff to a customer to then realising that actually it's the company that you're looking to sell. How do you go about finding those customers for the business? I mean, I guess in startup world, everybody's looking to the VC and the PE type structures, but how do you help find who are the right people for the business, or is that something that you expect them to have brought to the table themselves?
Well, it's done as a search, effectively. So we work very closely with a number of key corporate finance houses. And in this world, you get access to databases, M&A databases, and you can start to see, so you'll kind of reverse engineering who's in the market. And it's also, you need to think wider than just the UK, because you've got people from America and in Europe that are looking to buy companies. And you can also look kind of cross-channel as well. It might not actually be your industry. It might be somebody else that needs the assets that you've got in the business. So you would go out and create a long list of probably 100 companies that would be interested, that you would approach. Out of that, you might get something like 20 non-disclosure agreements signed. And then from there, you might end up negotiating with 4 or 5 with a view to selling to one. Now, a really big part of this is creating competitive tension in that process. So it's hugely important that you don't just wait for somebody to knock on the door and then you're negotiating with that one person. The idea is that you build up this excitement and buzz about the business, and then you've got people to play off in that process.
So given that you're one of the handful or so of specialists in this area in the UK at the moment, of the last, let's say, 2-3 years, because I guess since COVID, we've had peaks and troughs of business transactions, but you said that there are a host of people out there. Is getting that cadre of and that competitive dynamic still reasonably okay for you guys? I mean, just getting a feel for the market as it is today, do you feel that competitive dynamic is still able to be pulled together and that you guys are well placed? I mean, do you lean on the Institute for this, or is this your own networks, Trevor?
No, it's our own networks. The Exoplanet Institute's pretty much, that's America's side, so we've got a lot of contacts over there, but it's the network that we built up in the UK. I think fundamentally, I mean, all of this is hard. That's why I encourage everyone to start thinking about this as early as possible, because it takes time. Don't leave it to the last minute and then think, right, I'm going to sell my company, I'll phone up a broker. That's probably the worst thing you can do. Now, speaking to Deal Suite, who do a lot, there's a database and manages a lot of M&A work, and some of the corporate finance teams. Last year, there was a definite lull in the amount of deals going through, but that business has not gone away. It's like a glut, and it's just sandbanked, and you can start to feel the market moving now as we come into this year. So, yeah, I think just people have sat on their hands, basically. You can see it in capital markets as well. So funding has, I wouldn't say it's dried up, it's just become a lot more difficult to get hold of. And then the people who are buying the businesses obviously need to raise money, so that stalls things. Interest rates have a massive effect with the capital asset pricing models that are put together because the cost of capital goes up. So all of these things have kind of headwinds, but you've got to be ready, and you've got to be ready when you're ready, because the markets are always going to be moving.
I guess that's the point, is that the markets are moving. You may be wanting to sell in, let's say, 3 years, 5 years. I was going to ask you, actually, you say you should start planning as early as possible, but when is the latest date to have a sensible journey forward? Is it a 3-year horizon? I mean, somebody comes to you today and expects for a sale next year. That's unlikely to be the case. Useful, is it?
Yeah. I mean, the quickest you could probably do it is in a year. So if you looked at 3 months to prep the business, 6 months of market, and 3 months to sell it. But that's crazy, because you need time to do these things and to set the platform up. Sensible time for me is when the day you start thinking about enterprise value from day one.
But then going back to that conversation that we started with around how much is it worth, that what the founders want as an exit, that could change so massively. I mean, so we started the journey, let's say 3 years ago, 2021. Valuations were they double what they are now? Were they 150% of what they are now?
Fluctuates, doesn't it?
They were big. So you started your journey with a view of an exit of X, and the market today is talking about, let's say, an exit of 0.75 of X. What do? Do you play into that timeline, or would you say hold, or because I mean there's an argument that the market, the value at any point in the market is the value of the business, and you can hold out, or it might get worse. What would you say to somebody just on this particular journey? Let's say there was a conversation, they brought you on in 2021, there was a valuation and expectation there of a certain number, and now it's not there. What would you say to them today?
A lot of it is about the softer things that you can't actually see, so what their ambitions are and where they're going. If they've got time, then there's things that you can do in that business to move that number, depending on the kind of company. So, and that takes them into a position where I think the other thing that I'm very clear on is that a lot of businesses, you don't get a choice of when you're going to sell, because things can happen in life. Divorce, people die, you can get ill. Those things happen, and they're very, very real. So for me, being prepared and being able to press the button today, it's all of this is about optionality. And we all have this view of, right, we've got the Everest moment and we want to get there. But things happen, and it comes out of left field a lot of the time. So
thinking about the exit planning business that you run now of your own, right? So stepping back as being a service provider to all these other businesses, how do you gauge how your business is running now? Do you have an exit plan? Do you have an exit plan?
Yeah, I'm going to carry on working till the 17th of February 2046, when I'm 75, is my plan. I think from being a kid, I've been fascinated by business. I absolutely love what I do. And for me, it's more of how long I'm going to keep doing this. We'll see what my other business partners want to do. I think they've got plans of selling. We are already all the time, you can imagine in the nature of what we do, thinking about this, what's going to happen next, how's it going to look. My business partners are a little bit older than me, so they'll probably leave first and get their moment, and then maybe it gets folded into a corporate finance house or something like that.
But how do you gauge how the business is running at the moment yourself? What are the metrics that you look at? Not obviously the bog standard ones, but how do you get a feel that you're actually on track, things are all right at the moment, or not, and you need to intervene?
Yeah. So as I said, my business partner, one of my business partners, is a finance guy. So we have a number of things that we're looking at all the time. But the biggest thing, as I said right at the beginning, is the cash position of the business, which we are really clear on. The other thing that we look at is we use a thing called a DuPont formula, which enables us to stitch together the balance sheet and the P&L of the business. And through that lens, you start to look at the assets of the business and how well they're sweating. So you've got assets, how much income's coming off those assets. And if you really dial yourself in with this stuff, you can start to look at that as a leading indicator rather than a lagging, which gives you the ability. It's a bit like having a blood test. You might look great, but if your cholesterol's up at 9.7, you've got a problem. So that helps a great deal in the business, that we can start to get a trend and trend analysis early on in the business.
But for a business like yours, what are the assets that you're sweating?
So we do it through the people in the business. So that's the main bit. It's basically off payroll, and then what the return on that payroll is.
And how do you adjust that? So go back to that assessment. How are you assessing? Is it just revenue per individual? Is that the best assessment for you?
Yeah. So looking at that kind of stuff is you're all the time trying to think about the effectiveness and the efficiency of the business as you're moving through. So having that ability to be able to say, well, I think the big thing that we're looking for all the time is the trends in the business. And then if we're going to move this dial, what does that actually do? And I think the bit that I've learned is try not to move everything all at the same time. You've got to be quite calm month on month and say, right, we've now done this piece of marketing. Did that have positive effect or negative effect? Right, negative, right, let's move that back. Let's move another dial now.
And, given that you say there's a big journey to be taken within the UK relative to the US in this whole game, we talk to thousands of businesses, and I would say only a fraction of them have actually had this type of conversation or had this thought. I think everybody knows that they've got an exit and they've got in their mind, maybe 5 years, maybe 10 years, but they haven't done any of necessarily the planning around it. So I think there's a lot of folk that we can certainly get help from you to support. But from a business perspective, what's your mission now in terms of changing that dynamic that you articulated in the UK? Is there stuff that you're doing outside of actually doing business, about building the awareness?
My thing is and the bit I'm grappling with at the moment is our Achilles heel as a business is that it's incredibly time intensive for the team. So we can work with a handful of people. Now, that's the bit we're going to have to work out over a period, and whether we want to build this to a massive scale. I think I absolutely, and the team absolutely love working with the entrepreneurs, but they've got to have the right amount of attention. And, maybe that's a flaw in our business model, but I don't know that I want to change it, to be honest. And having run bigger companies, there's a question whether I want to do that and take this business that way. So we'll have to come back and splinch in a couple of years, yeah.
Indeed, but you say it's sweating the assets, and in this case, it's the humans. How do you get to a level, or how are you gauging what the optimal is? Because you can keep pushing people, and you may not see that they're on the verge of breaking, let's say. So, in your own mind, given that it's then limited to the capability or the number of deals or transactions or engagements that a team member, how are you going to assess where you're at the right place? Not too much, but you're sweating it enough.
I think I have a acute feeling all the time of, am I having fun in the business or not? And I check in with myself a great deal and with the team. And I think as I've got older, this this drive for more and more and more and more, that left me years ago. So I'm quite comfortable now with the people that I work with. And I think also as you get older as well, you become incredibly clear that you've got one go at this life. You get one shot at it and you've got to be enjoying it. And I think because I'm very much connected to that thought process, and I think we're also lucky anyway. If you're a business, I absolutely love entrepreneurs. Entrepreneurs tend to be doing what they love. They've got the courage to go and do this stuff. It's probably the most fulfilling job in the world to be an entrepreneur. And I don't have that hustle, push. I don't have it. I don't think you need it either a lot of the time. So I meet a lot of business owners. If we can actually just calm them down, they're probably 1 degree off actually making stuff move in the right direction. But that goes back to the lessons that I learned in my first company of just pushing too hard all the time.
I think that's very insightful. So, we're talking to you today. You're out in Portugal. You're working as well as living life. As you said, you only live once. So what's the future looking like? What's the next 5 years looking like for Trevor? What do you want to achieve from your business planning game?
We meet a lot of companies. I think I'd like to partner with a number of the people that we work with. That becomes exciting. I also managed to join dots that other people can't see because one of the best things of my job now, so for 20 odd years I've been running companies, and you're so in the thick of it, running the thing day to day. It's such a different position when you are talking to different businesses from one situation to another. So in the morning, I could be talking about, it could be a team issue that we're talking about. In the afternoon, we've got meetings going on with investors. And the next day, we could be talking about, it could be something to do with a structuring problem where they've got intellectual property tied up in the trading business and needs moving out. And all of those conversations are moving all the time, but what you find is that you can start, when you jump from market to market and company to company, you can start to see, well, hang on a minute, we could do this a little bit smarter than what we're doing here. So I think there's a lot of value to be brought in by being able to partner, and I'm talking about equity partnerships in some of the businesses that we work with.
Well, that would be great. I'd love to see how we can help you do that. As you know, that's exactly where Vested's strong point is. Brilliant. Okay, Trevor. So is there anything else you wanted to share? If you were to say, as business leaders, entrepreneurs who are out there today and listening to this podcast, haven't really done anything other in their minds than thought, I'm going to have an exit in 5-10 years, as I say, what would be the 2 or 3 things that you'd say, please do this, and then at point X down the line, reach out to somebody like Trevor?
Number one, 100% of people are going to exit their business. It's definitely going to happen. Even if you cling on forever, there's going to be a point where your time has got to come to an end. Whether the business goes on, whether you decide to close it, that will definitely happen. Remember that you're probably going to get one go at doing it. It's very important. The other part is there's 5.2 million companies in the UK. Very, very few get above a couple of million turnover. I mean, it's a handful. Very, very few get over 5 years old. So if you've done all this, and you've taken a huge amount of risk on that journey, and entrepreneurs give up so much, they really do. They take all the risk. They give up time with their families and all the rest of it. And there's got to be a reward for that. Most people have this view that it was always about freedom at the start for a lot of people, that they wanted to do their own thing. And it's some kind of evil bait and switch for me when they don't get that. It really niggles me. And there's bear traps along the way. So it's a team sport doing this. And there's a lot of people out there who want to help you on your way. I think my problem in the early days is that I never asked for help. And it doesn't, for a lot, and it'll be the same for you, Ifty, for a lot of the people that are probably further down the road than you, they actually really do like being asked to help, and they want to help. And it's not a money thing. The value from being able to see someone and just point them that 1 degree in a different direction is huge. And they've been very, very clear. Very few companies that go to market sell. And it's a really low number, less than 20%. I was looking at Blue Box, who are corporate finance sales the other day. They were saying like 1 in 10.
1 in 10 that go to market. So never mind the 5 odd million that there are. Those that go to market, only 1 in 10 of those sell. So I guess there's a couple of things that, I mean, we could go on for ages in this line of question, Trevor. But 2 things. Firstly, at what stage do you, how do you handle that conversation with the founders who's come to you to help exit their business, and then you turn around and actually win? Yeah, it's not going to happen, mate. How does that happen? And the other one, and you just mentioned it a few minutes earlier, at some stage you may have to help them understand that actually the business, the exit of the business is that you need to shut down. That must be a difficult and interesting conversation to have, and the dynamics around that, the political or that human interaction that you have to give must be quite challenging.
It's a very real thing, and you could see the blood draining out their head that they've spent 20 years building the wrong thing, or they thought wrongly that their company was worth a fortune, and it's not. So this is why this stuff's critical. You've got baby boomers are all retiring. I think the youngest baby boomer now is 60 and the oldest is 78. They are all retiring. This is a huge glut. It's a pig in a python of all these companies that are coming to market. And there's a big study that they did at the Exit Planning Institute where they started to realize that baby boomers and Gen X are completely different. Baby boomers work, and I'm sure you know people, 7 days a week, they graft, and a big part of their thought process and their bearing and their feeling as a person is that they work so incredibly hard. Now, Gen X tend to be a bit more work-life balance. It doesn't have to be so hard. So you've got to kind of think that some of these companies are set up that way. And then a lot of the Gen X people don't really want to step into those shoes. And then you've got millennials who I honestly don't know many millennials, but they want to do crypto and all the rest of it. I don't know that they want to step in and be working in a drain company or, So you've got to think about these dynamics. There's been so much change that has gone on over the last 10 years of what people actually wanted, and the speed of technology that's coming is changing everything. So it's all of these things matter though. It all comes together and it needs unpacking in a place so that you can see, where you're going, how this is going to work, and where you're going to get to your goal. But it goes back to like I said at the start, 40,000 books on growth and just over 100 on exit. That's wildly out that you've got to have an eye on this.
Yeah, no, I have to agree, which is why it's brilliant to be able to speak with you today, Trevor. Thank you so much for the wisdom that you've shared. And I think there's another podcast to come on this when we're a little bit further down the line, because there's the other half of the conversation where you get into the nitty-gritty of getting ready for an exit. And I'd love you to at least start shining some light into that space for for many of the founders that we seek to serve and support on Vested and beyond. So thank you very much, Trevor. Enjoy the rest of your day with that work-life balance out in Portugal, and we'll catch you soon.
Okay. Cheers, Ifty. Take care.
Thank you for joining us on this episode of FounderMetrics. Remember, the biggest of ambitions are within reach when you leverage the right metrics and strategies. If you enjoyed this episode, be sure to subscribe and never miss out on any future ones. And don't forget to visit us on www.vested.com for additional resources, articles and exclusive content. Join our growing community of entrepreneurs and founders by following us on LinkedIn, Twitter, X and Instagram. We'd love to hear your thoughts and insights. Together, let's continue to unlock and share the metrics of success and create a brighter future.